Welcome back to this episode of the Crypto Fatcat and the Crypto Skeptic. Today we're going to talk about the fear of missing out, or FOMO. But let's start with what's happening with the price of some of the major cryptos and the market cap in the crypto world.
Sounds good to me, Sean. Well, crypto is down a bit on the last week or so, the last 7 days. The overall crypto market cap has dropped from $1.23 trillion down to $1.19 trillion. These are very small drops, really, in the crypto world. Anyway, Bitcoin is down 5%, down to $27,500. Ethereum is down a little bit less than that, 3.5%, down to $1,833. That may sound like a lot in the world of stocks and things like that. In crypto, those are just honestly noise as much as anything else. It's just sort of moving between price resistance, and support as much as anything else. So I wouldn't personally think too much of those things, but that's where we are.
Okay. Any news that we should be aware of in the crypto markets this week? Here we are, what's today's date? May 11th, May 10th, where you are?
It's May 10th. It's May 10th in the United States, at least.
Mm-hmm.
Wherever you are, I can't speak to that. Okay.
I'm in the future.
So there's a little bit of news. Yeah. Sports Illustrated launched a Polygon-based NFT ticketing platform. So Sports Illustrated moving into the world of crypto a bit with NFTs for tickets, which I think is going to be where ticketing is going in general. NFTs make all the sense in the world for ticketing. The one other big news is there were 2 countries where Bitcoin was legal tender. There is now one because the Central African Republic has rescinded itself making Bitcoin legal tender. So it is no longer legal tender there. And there are lots of reasons for that. The main reason is that I believe less than 20% of the populace of CAR has access to the internet. That's really tough if you're going to be using digital assets, which you would be sending via the internet. If you don't have access to them, it's not a huge surprise that it failed there. But it did fail.
Okay. So not a lot of news currently in the crypto world.
I mean, there's always news, Sean. I could go a lot deeper if you wanted me to. There's a thing called BRC20s now, so people are using Bitcoin to do NFTs for the first time. The Bitcoin network, which has never been done before, it's actually making the Bitcoin network much more expensive to use. Transaction costs are way up. By the way, also on Ethereum, transaction costs are way, way, way up. If you use Bitcoin for other things, it kind of sucks, but it is nice to see the networks being used.
Okay. And why is that? Why are prices way up?
Well, the more people want to use the network, the more transactions there are, that's going to push the price up if people don't want to wait for their transactions, because it's sort of like an elevator or a train. There's only so many tickets to this train. And if you want to get on the one that's leaving right now, you may have to pay a little bit more of a premium. And if you're willing to wait 10 minutes for the next one, it's a little bit cheaper. So if people want to get something through right now, if they want to mint a Bitcoin NFT or send Bitcoin NFTs to someone else or something or buy these meme coins on Ethereum, which is one of the reasons why Ethereum transaction costs are popping as well. That popularity makes it a little more expensive. Just like on an airplane, if you want to fly, everyone wants to get on that flight, tickets cost more.
Yeah. Okay. So I think credit card companies, when they process charges, they generally charge around, I think most of them are 2 and 3%, somewhere in that range. Although I guess sometimes it can be closer to 1%, but let's say that 1 to 3% range. What's these fees that are happening with Ethereum and Bitcoin when people are using them? What percentage is that?
Well, they don't do it as a percentage. That's not how it works with Bitcoin or Ethereum. It's just it's not really a flat fee, but it's just a fee based on the fact that you want a transaction at this time, no matter how big or small your transaction is. So you could literally send $20 billion and it would cost the same as sending $100. On the Bitcoin network right now, if you want something to go quickly, it's still not that pricey. It's like $8 or something like that. But 3 weeks ago, it was probably 40 cents, to give you a sense.
Wow.
And so things have really popped up big time for the price of it. If you're willing to wait a little bit, like a few hours, I think it's down to $2 right now. On Ethereum, it's more than that, depending on what you want to do on Ethereum. But if you're sending, if if you're buying something on a decentralized exchange, for example, it might cost $30 or $40 right now. Now, again, you could buy $20 million worth of something. You do one swap for $20 million. That's also $30 or $40. So, but what it does do is it sort of means whales might use this network more, and smaller guppies who don't have bigger net worths, or big digital net worths at least, may not be so interested in using these networks right now, as it costs more than it has been costing for a while.
So is this going to be something that kind of plays out into the medium or longer term with these higher fees, or is this anticipated just to be a little blip and then fees are going to go back to much cheaper?
It's likely to be more of a blip than a long-term thing for a few reasons. Ethereum, first of all, has scaling solutions already. Polygon, which is what Sports Illustrated is doing the NFT platform on, is a side chain of Ethereum. You can run Ethereum applications on it. It costs pennies to do transactions on Polygon instead. There are several other what's called layer 2 solutions for Ethereum, which are things that are built on top of the Ethereum network using Ethereum security, but batching all the transactions together, so it only costs like 20 cents or $1 to do something rather than $30 to do something. Also, Ethereum is continuing with their beacon chain upgrades, which, with all the sharding and all the things they're doing with that, should also bring transaction costs down. And there's more and more layer 2 solutions and even layer 3 solutions coming for Ethereum. So I'm not too worried about that for the long haul for ETH anyway. Why are you smiling? What are you laughing at? Is this too technical?
I'm laughing because Kian and I have always used the word shard and sharding as where it's this combination of where you fart, but you maybe have a little bit of,
It,
little
no,
extra going on there.
it's shard with a D, like shards of glass, not shards.
Okay.
Shards, because it's like lots of things in many places. Bitcoin has the Lightning Network, which is its own sort of version of a layer 2 solution, which is not being widely used, but when used is essentially free to use and almost instantaneous.
Okay.
So there's solutions being in place for all these things, and I don't expect this to be a long-term big issue for either one of these networks.
So when you say, there's an alternative to Ethereum itself built on the Ethereum network where you can use Polygon, is that almost like, in my mind, I think like, oh, okay, so in order to pay for this in US dollars right now, the transaction fees are much higher. So instead of US dollars, I can use euros. And right now, euros, or let's use a currency that's less popular, like because Polygon is less popular than Ethereum, I'm guessing. So let's say I could use Mexican pesos and pay the equivalent amount in Mexican pesos, but it's like super cheap to use, like the Polygon. Is it like using a different currency?
No, it's not. It's like using a different network entirely. So it's like living in New York City and you're like, oh, I could take a cab or I could take the subway. Cab costs $40, gets me there in 10 minutes. The subway costs $2 and gets me there in anywhere from 8 to 15 minutes, kind of a thing. The good news is, actually, with Polygon, it gets you there faster too most of the time. It's usually almost instantaneous and cheaper. The thing is, you have to move your assets to the Polygon network first, so there's a cost involved with doing that. And you have to pay normal Ethereum transactional costs to move to the Polygon network first. A lot of people have done it. There's billions of dollars on the Polygon network even now. And things like Sports Illustrated opening up an NFT platform there for tickets and other things being built on it means more and more stuff hopefully will be on there, and it'll be even easier to move stuff around cheaply. So it's not the same as like, oh, right now Polygon's worth, less, so we should use that. It isn't like that. Polygon will always be cheaper than Ethereum.
Okay. So let's talk a little bit about the bigger picture of FOMO, which is one of the reasons why so many people, I believe, have invested in crypto. Whenever there's a bull market, you read all these headlines about, how Bitcoin has increased so dramatically in price. And there's usually stories as well about people who are living in their mom's basement and they're suddenly worth $500,000 or $1 million in a relatively short period of time, over a couple of months. There was one story I remember reading about a guy who he had saved up for a house. He was out in Los Angeles and he was like a 27, 28-year-old guy or something like that. And so he was working a couple of jobs and he'd saved up and put together like, I don't know, $75,000 for a house. And he just kept trying to bid on these houses, losing out to other people. And the housing market was so insane. Finally, he was like, forget it. I'm just putting all my money into crypto. And, during that bull run, his net worth went up to over $1 million. And, his mom was like, sell, sell. And he was like, I'm never selling. I'm holding on for good. This is my ticket to paradise.
Yeah.
Um, so he's well ahead of the game still, but I imagine his net worth has bumped down considerably from the highs. So people read those stories and their fear of missing out is, I want to get in on this. I want to make money. And I don't quite understand how all of this works or why this is a good investment or not. But that's not my main motivation. Not my main impetus to doing this investment. It's because I want to be like those other people who are getting rich. So I'm going to put my money into it. So have you come across a lot of that personally in your crypto journey?
Yes, a huge, huge amount. I've experienced it myself. I've certainly seen many other people around me who are excited about it. Like I went from 2017, 2018 with Bitcoin, where I was like pretty much the only person I knew who was interested in it, pretty much. And people around me were always telling me to sell at all phases of the Bitcoin price. Bitcoin hits $800. I'm like, you got in cheaper than that, you have to sell. And then it hit 3,000, and my family was really pressuring me to sell. And then it hit 10,000. And all I could hear about was sell, sell, sell. And it never ends. Like no matter what the price is, the refrain was the same. But I definitely see, sorry, that got a little personal with my family in my life, but I definitely see people as the price goes up, people get interested, right? The media starts covering it. People get excited about it. People see the potential of like, oh, maybe the Bitcoin bros were right after all. Maybe the crypto bros were right, and people get excited about it. And we see these frothy tops as a result, right? And that's the emotional investor at play, basically. So yes, I absolutely see it all around me when Bitcoin's going crazy. That's all everyone wants to talk about.
All right, so let's take a look at some of these historical FOMO manias that have gripped the world. And let's look at how they ended. And we'll perhaps talk about if they've ended badly, whether that's going to
Right.
be the case for Bitcoin or not. Obviously, for the people who bought in at 17,000 during the last bull run in 2017, 2018, if they'd held on, oh, they're doing pretty good right now, Not
Yeah.
fabulous as far as investments goes, but pretty good.
I mean,
Um,
they're beating the market probably. Barely, but they're probably beating the market, right? They're up like 50%, a little more.
so let's take a look back in time. And one of the first FOMOs often referenced is Tulip Mania, which happened in 1636 in the Netherlands. And
Yep.
tulips became a status symbol for the wealthy. And the price of tulip bulbs soared, went to crazy levels. Some tulip bulbs were selling more than 10 times the annual income of a skilled worker. That market crashed fairly quickly, and most people lost their fortunes. So
Yeah.
um, you'd have to have been very, very lucky with that one. If you got in for the fear of missing out, who gets in for the fear of missing out and then gets out when they've made some
Nobody.
money?
Very rarely do they pull that off. That's a very difficult daily double to hit, I gotta say.
Right.
That's a great point.
So most of those people in the tulip mania probably, got hurt badly and never recovered from that. Next one was next major one in history, perhaps, was the South Sea bubble, which was in 1720. And the South Sea Company was granted a monopoly to trade with South America by the British government. Company's stock rose rapidly, and it was fueled by that speculation and that fear of missing out, right? And it's interesting because in this case, unlike with the tulips, they were investing in something that was providing value. The uh, at the time there was all this exploration going on. There was gold and other, very valuable goods being brought back to Europe. But the company's profits were overestimated
Mm.
wildly, and the bubble burst, leading to a financial crisis that apparently affected the entire country. Um, so South Sea
So that's
bubble.
like so that's like fraud, though. Like if the company's profits were being lied, if they were lying about how much money they were making, people were investing as a result. That's like the investors are getting defrauded, right?
I don't
As
know if
opposed to
that's what
like something
happened.
else that's going on.
Yeah,
Okay, I don't know.
maybe.
I wasn't there.
Right. Yeah, no, I wasn't there either. But even if it wasn't fraud, I think that people talking to people, and then you have this price action that you see over 6 months or over a year, where you're like, oh my God, this
Mm.
thing is up 80% or 200% or 300%. My neighbor, he put, 5 kopecks into that. And look at now he's like living large. He's got his own cart. He's got a new donkey. I want a new donkey.
Yeah.
And there you
Everyone
go.
wants a new
Then,
donkey.
yeah. Next, we're going to jump way forward in time to the dot-com bubble. And you and I lived through that one where we saw that some of these internet companies were just going up exponentially in value because the internet was the next big thing. And it turns out it was the next big thing. But the problem was two things. One, some companies were just ideas and they actually didn't have any income, like pets.com probably being the most famous one, where the valuation was huge and the investors made a lot of money in the short term, but then lost it all because it actually wasn't really a viable company or it didn't turn into a viable company. Maybe it could have been. But even there was companies like Amazon and Yahoo and some of these internet companies that are still around, and Amazon obviously very profitable, but there was this fear of missing out where the prices went way up, and then people looked at what the income was coming in and said, "Wait, these companies are way overvalued," and so then people started getting out as quickly as they could, and it crashed quite quickly, and some of those stocks went down 80-90% or more from their highs. And a lot of the small time investors, did sell at that time. Unfortunately, when it comes to Amazon, because if they'd held on for another 20 years, they'd be rich.
Yes, they would. Apple also, by the way. They'd
Yes.
definitely be rich if they had Apple in 2000 and just fell asleep for 23 years. They'd be rich now at almost any amount. If they had $10,000 with Apple, they'd have millions right now. So
Yeah.
yeah,
Pretty dramatic, isn't it?
it's
Yeah.
amazing. It's amazing.
So because there's that sort of that balance of, okay, so there's this big jump in price and then it starts to come back and maybe it's come back 30%, 40%, 50%. And you have to make that decision. Do I jump off this train, that seems to be crashing over this bridge, or do I hold on to my Apple stock or to my Amazon stock? And, weirdly enough, what most people seem to do is hold on until it finishes the crash and is then just settled down where there's not a lot happening. And it's like, oh, now it's down 80% or more. And now it's down 80% or more and it hasn't moved for a little while. So now I'm going to sell, whereas
Right. They think like it's died or something. Yeah.
yes. Yeah. Yeah. Yeah.
I mean, what I hear with in all of these situations is people investing without really understanding what they're investing in every case, right? They don't really know what they're getting into. They're doing it because of, hearing about whatever gossip and excitement and speculation or whatever else it might be. And that's it. And so they get in as the price is going up and they sell as the price is going down. And it sort of makes the world go round in its own way, right? Like that's how professional investors make money, is because people behave like that, right? If people just bought and held, everyone would be way richer than they are. Fidelity did a study on this where they found out that the most over a 20-year period, the Fidelity investors who made the most money were people who either died or forgot they had an account. Everyone else was trading, and to whatever degree they were trading, anytime they would, like, you do better if you think you bought something that's good, just forget about it and leave it for a long time. If it's a viable thing over the long haul, it's, you're going to make a lot of money. And if it isn't, okay, sure, it's going to go ultimately to zero, right? Or near zero. So yeah, this is investor behavior that we're talking, consistent investor behavior we've seen over hundreds and hundreds of years. Crypto is another place where we sometimes see that behavior for sure. But I don't know why crypto has to be in the crosshairs for that, right? That's just people being bad investors, which we've always had, and I assume we will continue to have.
Yeah, I guess the question is with crypto is people who are investing it for that FOMO reason. Is it something like the tulip mania or the South Sea bubble, where eventually your investment goes down to zero, or goes down to near zero? Right. Or is it something like even the real estate bubble of 2005, 2007? If you got in at the highs, you might have lost 30, 40% of your investment. If you're able to hold on and keep making the payments and you held on to it, 10 years later, you're back at break even and headed beyond that. And then you get to take the next ride where the real estate market is taken off again. And you might You might be looking at some returns from when you bought it initially where you're like, I'm compounding at 5, 7% a year. Wow, I've done really well. It's like, yeah, you've done really well because you held on. And so, there's that divergence. You're talking about people do well who hold on. Well,
Yeah.
people crash and burn and lose everything if they're not diversified, if they hold on to the wrong thing. But if they hold on to the right thing, then, in 20 years, it looks like they're a genius, even though they've gone through those real downtimes.
Right. Isn't that how it's supposed to be though? Like we have we have billions of potential things to invest in, right? We have stocks and crypto and real estate and ETFs and whatever else, right? We got a million things. And those who pick well and are smart about it generally do a lot better than those who don't. Like that's how it's supposed to be, isn't it? Like it's not
Is
supposed to be
it?
that everyone just gets to automate. If people just want to make money in safe ways, you can do that too. They can buy treasuries. They can, I mean, you don't really make money against inflation, but people can think they do. You can buy index funds and just make your 6% a year or whatever it is. That's fine. Like that's a totally reasonable. In fact, Warren Buffett advises that. He says if you're not a professional investor, just buy index funds. It's better. He's probably right. But if you want to go through but if people are going to pick specific companies, like thinking back to the dot-com bubble for a second, like the people who bought Amazon and believed in it and hung on were richly rewarded, right? The people who bought into pets.com instead were not. And yeah, there's going to be winners and losers in all these things. And if we knew which ones were going to be the winners ahead of time, they would be a lot more expensive than they are, right? Bitcoin is cost 27,500 right now because most people think it's ultimately going to be a winner, right? That's why it's so expensive compared to what it used to cost. But we don't know that for sure. If we knew it was going to be a winner, it'd be over $100,000, I believe.
Yeah, I
So I
agree
don't.
with you.
Yeah. Okay.
And that's the way that the world works. It's like there's
Yeah.
winners and there's losers. And it is obviously isn't clear in the moment. Otherwise, everyone would have bought Apple in the early 2000s.
Right. We'd all be rich and it'd be incredible. That's not
Yeah.
sadly that. I mean, it would be great if it was that easy. It just isn't.
Here's something I'm curious about your thoughts on. In the crypto world, you know a lot of crypto bros. How many of them do you think are smart, and how many of them do you think are lucky?
Oh, okay. Interesting. I think a good percentage of the crypto bros that I know, and I don't know a huge amount to be clear, but I think a lot of them are lucky. I think a few of them are smart. Um, Actually, even the smart ones I think are pretty lucky. I would count myself in among the lucky group, to be clear. Like I the majority of the reason why I get to be a crypto fat cat now is because I got into Bitcoin in 2014 and I put some money into it after doing a bunch of research on it. But I didn't know anything close to what I know now about it. I didn't really understand it in deep ways. It just made sense to me and it seemed like it could be an exciting possible lottery ticket for the future. And so I sunk some money into it, believing that there was some real upside there if it hit. I was right about that. Cool. But I feel very lucky that it happened to hit. Like it really didn't have to. And from the stuff from 2014, where it was no one had heard of Bitcoin essentially, no one understood it really.
So it's interesting thinking about when you got in 2014. Did you have at that stage some of the FOMO going on? Was that some of your motivation, fear of missing out? Or was the FOMO that you experienced, did that come on more strongly during the bull market runs where there's sort of dramatic price action happen?
I did not feel any FOMO. I've never really felt FOMO around Bitcoin itself because I've always been in it. I've always had reasonable amounts of it basically from the beginning. Like I got in after a big price crash, actually. Like it had hit an all-time high of around 1,200 before I even learned about it. By the time I learned about it, it was down to like $400. So it was like in its version of the bear market 2 bear markets ago. And I remember sort of saying like, well, if it gets down to like what feel like extra cheap prices, I'm going to be interested. So if it hits like 300, I'll probably start buying, and so that's what I did. And I would check in over the course of a year, once every 3 to 4 weeks, see what the price was. And once in a while, I'd fire a little bit of money at it. So I didn't feel FOMO at all, but I remember it was like $195 per Bitcoin. I remember this one. And I had already put in some money and I was like, I guess I need to fire one more time at it at 195, but that's it. Like but like I can get like 5 for $1,000. I guess I just have to do it. Like, I'm just going to do it. I don't know. Maybe that's crazy. Like, I'm just, a lot of time, this money is just, I'm just throwing it in the incinerator. But when I'm right, I'm going to be so glad I did this. This is such a deal compared to even what I've been paying for it. I'm just going to, this is the end. If it goes down after this, I'm not going to keep buying it because it felt like I was just buying more and more lottery tickets and the same lottery ticket.
It's incredible. It just as far as the human psychology of that and what we do around prices too. Because even at 195, you can make a case in your own head where you're like, hey, a couple of years ago, you could buy this for $10, you know? And so 195 is like really expensive. Is it going to go higher than this? You know, like it should, but like it seems like it's already so high. And then now here we are at, 9 years later at $27,000. And it's the same question, you know? And it's interesting because in some ways you have more clarity and evidence for whatever your perspective is, whether the price is going up or down now than you did in 2014.
I mean, I would push back on you having clarity and evidence that, I mean, I guess, well, let's get into it. I would say you got a lot of clarity and evidence that like we understand Bitcoin's halving cycles pretty well now. We didn't understand them back then. And it seems to be on a pretty predictable 4-year cycle. And we are once again in it pretty clearly. It's done the same thing every 4 years. Like it's up, 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 down, up, 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 down. 4 years in a row. We've done like 11 years of that straight, basically. And you can tell which the down year is based on the halving cycles. Like you can predict it perfectly. Now, doesn't mean to say it's always going to be like this. I'm sure it won't, but it continues to be like this. Anyway, I think for me, the bigger piece is about where you anchor yourself. So like I was anchoring myself back in 2014 off the price of $1,200 per Bitcoin. That's what I was saying, not $20 per Bitcoin. If I was anchored around $20 per Bitcoin, yeah, 195 might feel like, gosh, I could have had 10 Bitcoin for this price. I could have had 50 instead. I'm only getting 5. But for me, I was thinking like I would have gotten, less than 1 before. Now I'm getting 5. That's pretty amazing. What a deal. That's how I thought about it.
That's really interesting what you anchor at. I'm thinking also that I just want to reflect upon these other historical sort of FOMO manias, and how often they kind of crashed and then came back, because that is a feature of Bitcoin. Like you said, this has happened multiple times now. So if we went back and we looked at, the tulip mania bubble, to my awareness, it soared and it crashed and it was done.
6 months total.
Yeah. The South Sea bubble soared. I'm sure there was ups and downs along the way, but when it crashed properly, it, I believe, was also done. The .com bubble, the same thing. As you get towards the end of that market, of that bull market, you see some ups and downs, but when it really crashed, it was not done. It was only done for several years, actually. Like I remember, because at the time you had some NASDAQ stock that I think, the index that went down by such a big amount, and you were like, surely at this price, it can't stay down here for what, but it did. It stayed there for years. But had you have held on, internet stocks are such that, of course, at some point, stocks that were technology stocks and that were sort of internet stocks were going to be valuable. It's just a question of what time frame that was. What would you like to say about that?
Mostly that I agree with that. Like the internet, I think things burn brightly for sure and then die out quickly. And those things, I think it's like tulips is a great example. There's many, pets.com is a good example, and many, many, many other .com bubbles, .com stocks happen in that bubble. But the ones that didn't die thrived beyond imagination. Not all of them, of course, but like a bunch of them thrive beyond imagination, right? Netflix went from being this nothing company to being one of the biggest companies in the world, right? Apple, I think right now might be the biggest company in the world. It changes almost on a daily basis between them and like Exxon and somebody else. But they often are. Amazon was down at one point in the .com bubble 95% off its high, And now is, if you had put $10,000 in Amazon, my God, at any point, by the way, even at its high in the dot-com bubble, you'd be doing great. But if you could have gotten in near the bottom, holy moly. But just having resiliency with this stuff, I think is a real powerful thing. Like, time is on your side with this stuff. It means sometimes you lose, right? And this is the same thing for me with the crypto market. I think the crypto market and the dot-com bubble are tremendous parallels to each other, because crypto is full currently of like 9 or 10,000 different cryptocurrencies. How many of those are going to be around in 10 years? I mean, and active? 40, 30, 20, 100? I'd be shocked if it was a lot more than 100. It's probably closer to 20, right? That are going to be like really used and really active. But boy, if you can pick those 20, I think you're going to be doing very well. I think you're going to really be crushing it. You're going to be Hank Aaron, you're going to break the record. And that's what we're seeing with some of these cryptos and some of these valuations. And so as we see some of these currencies survive these intense bear market crashes, like Bitcoin's done it. This is number 4 for its crash, probably even more, because it has many mini crashes along the way too. Even in bull markets, it has 20% drop downs for a month in the middle of the bull markets too. Bitcoin has a resiliency. Ethereum has a resiliency at this point. Some of the other ones have resiliency at this point. And if there's real reason for that price support, which I think there often is, which is basically that the bulls believe these guys have long-term futures, right? The ones that have real resiliency. Those are the ones that have a better chance, assuming the bulls are right. But I think, the money is often going to be smarter than the people who are on the sidelines not investing, because the money has reason to be more informed. The people on the sidelines who are talking without having anything in their portfolio has reason to be less informed for the most part. That's not perfect, of course, but I think that's generally true.
So clearly, and what you're speaking is sort of demonstrated through this. It's not tulip mania, because it's bounced back so many times from its crashes. It's not the South Sea bubble. It may be like the internet bubble, like you're putting forward. I just also want to mention the Japanese stock market and Japanese real estate, which crashed. Well, it hit its peak in 1989. And then 32 years later, the Nikkei is still 26% lower than its 1989 peak.
That's unbelievable.
Yeah.
That's crazy.
So 32 years later, still 26% lower. That information is from 2022, so I don't know what's happened in the last year. So I don't know. What do you do with that information?
I mean, some things are overvalued. Some things aren't. I mean, that's what so the Nikkei, I guess, was massively overvalued for whatever reason, price manipulation, bad information, who knows what else, fraud, who knows what else, scarcity. Sometimes the housing market is clearly overvalued, right? And we see a correction. Maybe you would argue that it is overvalued, but we see corrections every 15 years or so. It seems like in the housing market, it feels like another one's coming with interest rates and all that. It feels like there's a real chance that it's going to go that way. We'll see. It's not totally clear. That's true for assets in general, hard assets. The risk on assets, bounce around a little bit based on interest rates and based on, how much money people feel like they have, how wealthy everyone's feeling. The world in general is feeling, and the wealthier the world in general is feeling, the more all these all these hard assets go up, be it baseball cards, be it houses, be it cryptocurrency, the stock market, that stuff all goes up in the bull market times. The thing that's interesting is Bitcoin and crypto has divorced itself at least a little bit from that. Not perfectly. It still has some connection to it, but Bitcoin more than ever actually moves against the stock market. Like, it's not perfectly against it either, but I think I was going to call it the Wells ratio. It's not called the Wells ratio. There's some name for this, which is like how correlated it is to the stock market moving in either direction. And it's very close to essentially not correlated at all. So half the time when the stock market goes up, Bitcoin will go up, half the time it won't. Half the time it'll go down, which is kind of what you're looking for if you're looking to diversify, right? Like, to protect yourself a little bit from like a massive stock market crash. You love to have something that isn't related to the stock market crashing in either direction. It's just doing its own thing. So that way you don't have all your eggs in one basket. If it continues to hold that way, we'll see if it's relatively new that it's moving that way. Quite frankly, it's been like 6 months or something where it's been doing that type of behavior. With all the bank failures and things like that, maybe that's a new thing. Maybe it isn't. I don't know.
This is an odd question, but in your view, is FOMO a good reason to invest in crypto?
Oh man. Okay. It's not a good reason to invest in crypto. Mainly because if you're investing for FOMO reasons, you're probably not going to be able to weather the hard times. And if you can't weather the hard times, you're not going to make the money anyway, because the hard times always are around the corner in crypto. Like, you have 2 great years, then you have 2 rougher years. Like, that's how it goes. It isn't exactly like that, but it's close. You have one monster year, one really good year, one okay year, and one horrific year. That's the way it's been in crypto for 12 years running, essentially. I used to think that cycle was going to stop. I guess I feel like I'm just being proven wrong. It's been 3 years of me saying the cycle is going to stop any second now. I've stopped saying it because it feels like I'm just wrong. If you can't handle that really horrific year where everything draws down by 70% and you're going to panic and sell, then like you were saying before, getting in because of the FOMO doesn't do you any good. Even if you ride the highs all the way to the high, if you just ride it all the way back down and then get out at the bottom, all you did was either lose money or make a tiny bit of money and have a really difficult emotional experience along the way. Like, you might as well just buy index funds or blue chip companies, buy Apple. It's easier. It's fine. You'll do fine. Right. If you're in it. So no, I don't think FOMO is a good reason to buy. I think the reason to buy should be, I believe these networks are going to be used in the future for many things. People are going to care about them. People are going to need these assets. People are going to see these assets as having legitimate value. And it'll be obvious that they have legitimate value. And so buying them now at cheaper prices before everyone in the world recognizes their value is a good idea. That's the reason to buy, I think. There's probably other reasons too, but to me, that's a really good reason to buy. And if you have that reason, which is my reason, it's much easier to survive these difficult years. Like, I didn't have an emotional hard time last year, even though I lost more money than I've ever lost by factor of 3, I think, like almost 3x my worst year previous to that. But I understand that that's part of the game. It's a trampoline, baby. Sometimes we go up, sometimes we go down. But overall, I'm on a really nice trajectory and I'm cool with it. I'm cool with all the noise along the way. But it's because I believe in these networks. I may end up being wrong. And if I'm wrong, so be it. And it's going to suck. But, I don't have everything invested in these things. I have other investments as well. And, but I believe, for me anyway, this is a path towards what I'm hoping is not just like reasonable wealth, but like real, legit wealth. Like, like really have something here. And I guess that number is different for lots of different people, but I know what the number is for me, and I feel that's fairly considerable. But I think it's doable based on my current portfolio. So that's exciting to me, and I'm willing to play the game and sort of wait to see if I'm right. Basically, like it's like in Deal or No Deal. You know that game? You know how that works?
Sure. You choose a briefcase, and you get
Deal
out
or No
these.
Deal. In some ways, it's perfect, right? You choose a briefcase, and one of them has $1 million in it, and the other ones have differing amounts from 0 to whatever, $500,000. And they slowly open the cases, and they keep so many cases, they offer you an amount of money to stop playing. And they always offer you less than what the expected value of your briefcase is. So you should never take the deal, essentially, unless they lose their minds and offer you more. But I don't know why they'd ever do that, right? So like, I'm the guy who's just going to wait and see if the $1 million is in my briefcase. Like, I'm like, let's open all of them. Let's fucking find out. I understand sometimes there's $1 in there. But when there's $1 million in there, it's pretty good. And I feel like with Bitcoin and Ethereum and my personal crypto path, we've opened, I don't know how many cases are there to start with? Like, is it 20? Is it 40? I don't really know. 50? I don't know. Let's pretend there's 30. I feel like we've opened like 25 cases and there's like 5 left at this point. And like, one of them has $1 in it. One of them has $1 million in it. One of them has $5 million in it. One of them has $20 million in it. One of them has $10 in it, essentially. And I'm like, let's open some more cases, man. Don't offer me $3 million. Let's open some more cases and find out what happens. I feel like I'm playing a very high stakes game of deal or no deal at this point. But it isn't random. I understand why I think my case probably does have the wealth in it, as opposed to just like the juju tells me this, like I see around me what's going on with these things. I understand Ethereum is deflationary. It gives yield. You need it to run all these applications. You have to, because you pay in Ethereum. It's a commodity on the network. I see why people would want it. I believe I see.
Okay. This sort of makes me think, if we come to the conclusion that fear of missing out is not a good reason to invest in crypto, the flip side of that, the other side of that coin, is the fear of getting burned is not a good reason to not invest. So
Oh, nice.
if you're
I
being
wish I had thought of
driven,
that. I should have said that to you. Why didn't I think of that? That's really good.
if you're being driven by emotion, either to get into the market or to avoid it, you're not necessarily making the best investment decision. And well, maybe you could help me out. How would that play out? The fear of getting burned, because we know how the fear of missing out plays out. People invest. They maybe don't have a good reason to invest, so they don't have that much deep conviction in it. It's just based on the price action. If they get in near the top and things start to head back, they're having a very emotional panic reaction because they didn't get in to lose money. They get in to make money. They didn't want to miss out on making money that other people were making. That's their thing. And so then it's going down the other way, and it's like super painful for them, and they just want to pull the ripcord and get out and stop the damage, right? So they miss out on those long-term gains if there are going to be long-term gains. So play that story out for me with someone who's got the fear of getting burned, and that's their main motivation for avoiding the crypto market.
I mean, there's two ways to do it. One is to essentially just stop paying attention to the price action, which can be hard to do in extreme times in either way, when everything's going up like crazy or crashing like crazy. People want to talk about it. Less so when it's crashing, but still, people want to talk about it a little bit. But that's the easiest way to do it, is essentially not either to be like me and just be in it for the long haul. But I know that's hard. No, most people don't do that and can't do that. And I think most people also can't really do what I'm just saying, which is essentially ignore the price action for years on end. I don't think that's realistic for most people. Some people do it, but most people can't. The sort of settling way, like compromise way, is you buy some assets, and when they hit a certain amount, you sell off your principal. You basically cash out your principal. You take some profit, so that way you're free rolling the experience. I mean, you can't lose, you can only win on your original investment anyway. So if you put in $10,000, let's say, let's just say Johnny B is going to do this, and he's going to buy $10,000 worth of Ethereum, and Ethereum goes nuts, and it goes up to $7,000, $6,000. It's an new all-time high. It's $6,000, and Johnny B is like, "Oh my God, I've tripled my money. I put in 10,000, now it's worth 30,000." If you got this piece to you, which most people have, selling 10,000 once it's tripled is not a bad idea. You still have 20K of investment in Ethereum, which is more than you had when you started. You only had 10,000 invested in it, and you cannot lose money. Now, actually, you can. That 20,000 that's in Ethereum is now your money too. You don't have to. That would be lost too, but most people don't see it that way, right? Most people think in terms of profit and loss based on original investment. So I'm sort of talking to the caveman brain of investors that most people have. So that's a way that makes it much easier for people. I know. Get that principle out, and then they feel like they can't be hurt by it. They're okay no matter what. It's like, this is $20,000 free in Ethereum, which is like a little bag of the moon, and maybe we'll make it out there in space one day, and we hit the moon, and it's incredible. And if we don't, I didn't lose. I still have that $10,000. Now, this is, of course, dependent on Ethereum doing well, but okay, it does have to move for this play to work. But that's a way anyway to sort of like protect yourself from that piece of it too, instead of like, I'm afraid of getting burned, and then doing weird panic sales and stuff like that. Most people are much more calm. In fact, I know someone who did this exact thing where They bought Bitcoin at like 10,000 and then they sold some at like 35,000. They sold enough to get their original principal out. And so now through all this crashing and stuff like that, they were very emotional. They stopped being emotional once they made that sale and they really calmed out and everything. They no longer felt like they could be pierced or hurt. So
Okay, so
that's
let's
like a cheat code for it.
yeah. Let's play that out a little further. And obviously,
Great.
this is an investment advice. But like, let's say that same scenario with Ethereum that Joey or Johnny B buys $10,000 worth of Ethereum, and the price instead of going up to 10,000, the price goes down to $80, like it did in the last
Mm,
little dip, right? So now his
yeah,
$10,000 is worth, let's say $400. So
sure.
10,000 went down to 400. What is there a mental hack that works for people who have that fear of getting burned in that scenario? Like we got two mental hacks. One is just put it away for a certain period of time and try not to look at it. Don't look at it, which some people can pull off. And the other is get your principal out when the money goes up, when your investment goes up. But scenario three is Ethereum goes down to $80. What then?
Well, for me, I'm always looking at first principles with stuff like this. So, like at the bottom of the bear market, uh, Ethereum had hit like about $1,000 this time around, and Bitcoin hit like 15,400. Right. And this was during FTX and all this horrible stuff. And it was on the heels of the Luna thing and UST, and it was all hellish. And so I remember just asking myself, has anything fundamentally changed about the value proposition for Bitcoin and Ethereum long term? Because the answer could be yes, right? Like if regulation comes in and changes what's possible and what isn't in this country or in other industrialized nations, that could really change the long term outlook for these things. But I didn't think at that point anyway. Sure, there was a little more regulation risk, but certainly not regulation risk that would cut these things in half price wise or more than in half. So to me, it just felt like, oh, everyone's panicking. Cool. I don't have to worry about that. That's not my problem. Like, I don't see any reason why Ethereum would be affected by this in 10 years, which is how I often think. I'm often thinking 10 years out. Um, I don't know if that works for most people again, because when you have to believe in the assets to start with, you have to understand and believe in the assets, at least to some degree. But if you don't believe in the assets, you don't understand them, you really shouldn't be investing in them anyway. You should just invest in something you do believe in. You can do the index fund if you don't want to do anything. Just do the NASDAQ 100, whatever. It's not a big deal. That's my first best thing to say about it. The only other thing is if you put in a lot of money and it's down to being worth very little, for me anyway, that oftentimes I just think there's no point in cashing out. Like it's $400. That getting that $400 is not as important to me as how I would feel if I missed out on it coming back. So now sometimes it is a significant amount of money that it's dropped down to, and that's different. But often it's if you're talking about you put in 10,000, it's worth 400 now. If you're the kind of person who can make $10,000 investments, having $400 more in your account or not probably doesn't matter. So then again, I would ask myself, if I think Ethereum is going to zero, fine, I should get it. I should definitely sell and take that $400 with me. But if I don't know, and as far as I can tell, nothing's changed, then I would have no interest in pulling it anyway, just because who cares if it goes?
Okay, so maybe this is the same question for you. But let's say you open up that suitcase and the deal or no deal analogy, and instead of having the $1 million in it, you've got $40,000 in it. So how do you make peace with that possibility? Is it simply that in your head, there's always a future where that case becomes worth $1 million? It's just a question of time. Or is there also in your mind a future where that case never, even though maybe once it was worth $1 million, never goes back to that, and it's always going to be 40,000 or less?
Definitely, definitely there are situations or scenarios where that case never goes up in value, or in this case, the other time the value of crypto goes back up. For sure, there's scenarios like that. I try not to be blindly loyal to these things. They're not blindly loyal to me. They don't know who I am. Why should I be blindly loyal to them? They're just assets that I believe in currently. It's possible I'm going to really believe in other networks at some point. I believe there are going to be trustless Web3 networks that the world runs on. I do believe that. And maybe there'll be some Web 4 thing where I'll no longer believe in Web 3 networks. Currently, I really believe Web 3 networks are happening, are going to continue to happen, are going to happen in really big ways. So then it's just about identifying which networks it is. And right now, for me, that's mostly the big two, Bitcoin and Ethereum, with a little sprinkling of a few other maybes out there. If at some point it looks like those aren't the networks anymore, or will only have a little bit of the traffic on all these Web3 networks, yeah, then I would think it's unlikely that that stuff will go back up. And I think it's important to acknowledge that, and instead of just say like, wait for it's worth $1 million or 2 million or 10 million or whatever the number is for each individual person. Because yeah, it may not hit that. And, you know, I think part of it too is like you were telling the story of someone who had bought in, I don't even remember what it was anymore, what they bought into, if it was crypto. They bought in and it was up a lot, and now it was up less. Oh yeah, they bought something and it was like they bought Bitcoin at like 15,000 or something like that, and they wrote it really high, and now it's back down to 28. The other thing is like people struggle with being what's called upstuck, which is where you're actually making money, but it feels like you're down because your stuff was worth so much more at one point. It's actually a poker term where like, oh, I was winning, I was up $5,000 in the game, and now I'm up 2,000 when I leave, and I feel like I lost $3,000 instead of I'm up 2,000. Right? Both are true, actually, but that's like a very common emotional thing, as opposed like thinking like somehow we're always going to get out at the absolute high of something is absurd. We're not going to do that. We're never going to do that. We shouldn't even plan for that. And so we should try to pick things that we think are going to have tremendous value down the road. And so it doesn't really matter where the high, right? Like who cares when you sold Amazon if you did in the last 3 years, if you bought it in 2000? I mean, sure, you'd love to hit the absolute high, but you're a millionaire either way. You're making millions either way, right? It's pretty good. And ditto Apple and ditto Netflix and ditto probably a bunch of Google, Facebook, maybe, whatever, Microsoft, I don't know, other stuff, Nvidia.
Yeah. Okay, that's really intriguing. There's a lot to think about with that, and I guess it leaves me wondering whether I should sell my Celtics stock and whether that's peaked in value or whether it is just having a little downward blip and ready for the next surge.
Yeah, I don't know about that one, man. I'm not super optimistic, but by being not super optimistic, it takes the pain away. Anyway.
All right, great. I'll see you again soon.
Okay.